They say the same tide lifts all ships. Someone better tell small caps. I want to bring in Belpointe Chief Strategist David Nelson. Golly. So, David, coming into the year, everyone came on the show and said, small caps, they're due. Small caps, they're undervalued. Small caps, they do well when the domestic economy does well. Small caps, there was the market's crushing it. I haven't looked at the Russell in the last 5 minutes, but it was still down. What's going on?
That was the narrative coming into the start of the year, that we were going to have small caps were going to lead, go to international, go to China, anywhere that was cheap. It worked for about 6 or 7 hours at the start of the year. I thought the sell-off in tech at the start of the year, that was largely a tax event. A lot of people were looking to take some profits at the end of the year. They were so large, they had to wait a little bit. They waited up till after the first of the year. There's a lot of nuance to this market. There's a lot of people saying that they're getting out of tech. To me, expensive is not necessarily a catalyst to sell. You need a catalyst to get out of some of these names. Names like NVIDIA, that stock was up 200% last year.
Right.
Yet the multiple went lower. So whether a stock is overvalued, undervalued, is really dependent on the stock.
It reminds me of the old saying about the market being, you could go insolvent, before the market figures it out. Like, overbought, to your point, doesn't mean sell.
A lot of people shorting into this rally, and it's hurt badly.
So let's talk about one of the things that had me a little concerned is that the S&P hadn't broken out. It looks like right now we may end up with a new all-time high in the S&P. I want to let the audience know, if this is true, this is what usually happens. On average, a year later, it's up 10%, 3 years later, 31%, 5 years later, 54%. That is very attractive. If someone's not in this market, do they start to jump in right now?
Look, there are two catalysts driving this market right now. One is the fact that we're at peak rates. We can debate whether or not the Fed is going to cut. We can even debate the timing of the cut. But what isn't up for debate is the fact that they're done. Add to the fact that just this week, Fed's Waller talked about taking quantitative easing and throwing that to the side. There's already Wall Street banks, JP Morgan just came out with a research piece saying that the $720 billion coming off the balance sheet, cut that in half. That's a lot of liquidity that's going to come into this market. So again, like I said, It's about the direction of the fundamentals, and expensive is not necessarily a catalyst to sell.
There's a couple of names that you own or you're looking at. One is kind of curious to me, Delta. I haven't looked at the airlines. They've been a disappointment. And the other one is IBM, which, full disclosure, we took profits on too early. We took it at 66. It's at 70 right now.
Look, on Delta, it's not an investment. I'm buying this for the quarter. These are great trading vehicles. Look, the stock missed the number. They guided lower 14%. The stock went down about 14%. Made sense. This is also a story. They're going to be a beneficiary of AI as well. Think of it as AI in the sky.
But wouldn't you have to hold it longer than a quarter for that to work its way into the stock?
I'm looking for this to go from 6 times to maybe 7 times earnings. That's going to take you on its way to 50. 8 times earnings, which is historically where it lives, 8 to 10 times earnings. It's pretty cheap at this point. Look, airline profitability is about data, and it's right down to the logistics of getting the number of sandwiches right on an aircraft. Add the fuel in there, the fact that fuel costs are lower, and also add that customer service can benefit from the AI rollout. So I like the name at this level. I'm in it for the trade.